Hi guys, welcome back to my channel. Kelly here. There are two kinds of stock investors, day traders and long-term investors. While these two camps want to make money, they follow a very different set of principles. And because of this, situations like this will arise.
ほう、向かってくるのか。逃げずにこのディオに近づいてくるのか。せっかく祖父のジョセフが私のザワールドの正体を試験終了チャイム直前まで問題を解いている受験生のような必死こいた気分で教えてくれたというのに。
近づかなきゃてめえをぶちのめせないんでな。
ほほう。では十分近づくがよい。
While day traders choose to earn money quickly, long-term investors believe in the buy and hold strategy. So, which is more suited to you? In this video, I'll give you a list of criteria to help you choose your investing style. Then, I'll give you my own thoughts on which is the best long-term investing. But seriously though, I'll be as non-biased as I can because the point of this video is not who is right, but rather which style of investing will help you make more money. There's a lot to talk about, so let's start right now. Number 1. Which is easier to make money? Blogs, investment books, and Warren Buffett telling you to invest in companies that have a fair value, and this method of investing is called value investing, and they tell you to invest in companies that have a low debt, good earnings, and good price. Then throw in more ratios like debt to current asset, current ratio, earnings per share, PE ratio, you know, all the complicated stuff. I don't mean to say that these stuff are bad. These stuff are important, but they are not the most important stuff. It's like you think I go to my favorite Cai Fan store because the food there is good? No, it's important, but this is not the most important stuff. I go there because it's the only Cai Fan store auntie that calls me 帅哥, while all the other rest calls me 小弟. Kind of important. However, a long-term investor can actually skip all of this. And personally, as a long-term investor myself, I can tell you that I didn't really study about the ratios of the company. I focus on the only thing that matters, the management of the company. Just look at Steve Jobs of Apple, Elon Musk of Tesla, Jeff Bezos of Amazon. The one thing in common about these companies, other than the godlike stock price, is that the boss is a visionary. When you have a boss that can see far enough, he can bring the entire company to prosperity. Forget about the debts, forget about the PE ratios. Just look at the management. How did they navigate around challenges? What's their future plan for the company? If it is good, you just buy and hold long term, and you are almost guaranteed to make money every time. So now, let's look at how day traders make money. As an outsider, you may think that they only look at stock prices every day. But it's actually more than that. You need to look at technicals, lots of technicals. Well, not that much. Day traders have to go through months and months of training just to develop their ultimate system, only to find out that there are stronger traders out there. But even so, even the best traders only win slightly above 50%. Not 90%, not 80%, just slightly above 50%. And they have all the funds, all the tools, and all the connections, and they still have the risk of losing money. So, which is easier to make money? A long-term investor just needs to understand the management of the company, then just buy and hold. While on the other hand, a day trader needs to undergo months and months of training, and yet still have to risk losing money. So in this case, I would say a long-term investor will make money easier. Number 2, which requires less work. Assuming that both long-term investors and day traders already have the skills, now which method will require the less work? Let's look at the long-term investor first. Once a long-term investor buys into a stock, he will just hold the stock and dollar cost average into it no matter what's the price. Because studies have shown that dollar cost average works the best. There are many investors who think that they can time the market. They buy in, then the stock goes up 10%, then they sell. And if the stock goes up another 10%, 20%, then they'll be like, "Aiya, I shouldn't sell ah." Then they quickly buy back in. That's when the stock price goes back down. Then they'll be like, "Aiya, I'm so stupid." This cycle just continues over and over again. Warren Buffett has once said, only buy something that you'll be perfectly happy to hold if the market shuts down for 10 years. When long-term investors buy into a stock, they are buying a piece of the company itself. But many investors don't think that way. They only look at stock price. Let's say one day your friend comes to you and say, "Hey, want to start Cai Fan store together or not?" I guarantee you that your first question is not, "Hey, how much can I sell this Cai Fan store tomorrow ah?" Your questions should be like, "Can it make money or not ah?" Or, "What's the plan to grow the business ah?" Or, Did you tap the like button to help support the channel or not? That's how a long-term investor should see any stock, not just stock price every day. Stock price 你的头. A very good example is SIA or HiFlux. Many people buy in just because the stock price dropped and they feel that the government won't let it die. But if you look at this from a business perspective, if travelers can't fly, SIA can't make money, or HiFlux had lots of debts, you will know that there are much better companies to invest in rather than just buying into SIA or HiFlux and just hope that the stock price will go up. So the best thing a long-term investor can do is to understand the management of the company, and from then on, it's just buy and hold. The stock price went up, buy and hold. The stock price went down, buy and hold also. Give it time to grow. If it is a good company, it will grow its earnings steadily and you will be rewarded eventually. Now, let's look at the day trader. What's the work like? Every day before the market opens, they have to check the news. What will affect the market today? Did Papa Power print more money again? Then, when the market opens, they will have to monitor the stock price to look out for trading opportunities. If it matches their criteria, they will buy. Then, they will let fluctuations do its work. On average, they will have to do this 1 to 2 hours every day, typically when the market opens. So, total time taken is about 5 to 10 hours every week, or 20 to 40 hours every month. That shows that to be a successful day trader, you need lots of hard work and time put into it. But because a long-term investor don't have to do all this, they will save 20 to 40 hours every month, leaving them with more time to do other stuff. Like watching Frozen with their niece for the 10th time in a week, start their own business, or just spend more time with their family. Let me give you an analogy. In StarCraft, a Zerg player needs to have high action per minute to win the game. He needs to control the army, switch back to the base, train more soldiers, switch back, attack the base, switch back, upgrade tech, train soldiers. Meanwhile, I will use the photon cannon strategy, where I just build photon cannons at the enemy base over and over again until I win the game. Yes, it's dirty, I know that. So for this, I would say long-term investing requires lesser work than day trading. Number 3, which needs lesser money. As a long-term investor, you will need a huge amount of capital to earn something worthwhile. Take for example, if I invest $1,000 in Tesla and it goes up 100%, then I will make $1,000 profit. Then I'll be like, yay, it's something. But if my rich friend Xiaoming invests $1 million in the S&P 500 ETF and it just went up 2%, Xiaoming will have already made $20,000. Meanwhile, on the other hand, day traders only need a small amount of money. That's because they are using something called leverage. For example, if I want to buy Tesla stock, but I only have $100, then I could use something called CFD, which is just basically a leverage stock, where I can multiply the value of my money so that I can buy Tesla stock. Same for trading currency, I could use just $1,000 to buy $10,000 worth of currency by just leveraging my money. But here's a warning, Warren Buffett has once said that leverage is where many investors go to die. If you can manage your risk well, using leverage will be very beneficial to you. However, if you are a noob, using a leverage will KO you, because when the stock drops, the losses will be multiplied. That's when many investors get into trouble. So I would say that day trading requires lesser amount of money compared to long-term investing. But the caveat is that you need to be pro enough to manage your leverage. Number 4, which is less stressful. Many people think that investing is stressful, but you know what is more stressful? Frying fish in the wok, because the oil will jump up to sting you. True story. But anyway, if you invest the correct way, it is not stressful at all. As I've mentioned, once you understand the company, you can just confidently buy in at whatever stock price. During the March crash, when many investors are selling stocks, if you understand the company, you definitely wouldn't be selling your stocks, but instead would have bought more. Like Tesla, which was trading around $350 pre-split during the March crash. Same for Apple, Facebook, and many other great companies. You know the business is a good business, there's demand for the products. The company has been earning money and will continue to earn money in the future. With that knowledge, you'll be confident to hold the stock even if it drops 10%, 20% or even 50%. You know what it's like? It's like a swimming competition between Joseph Schooling and Joseph who is still schooling. You'll be confident that Joseph Schooling will win. Let's look at the day trader instead. When you are day trading, you are risking your money every time you put in a trade. Yes, you can limit your losses, but as mentioned, even the best day traders lose money. Using a system will be less stressful because instead of using emotions to trade, you are using a proven strategy to trade. Even so, if you lose, your emotions will be affected. You'll be disappointed in yourself and you feel that you have to try harder to earn back the money that you have lost. On top of that, many day traders treat the stock market as just a big casino. When they win big, they will think that they are very smart, they get overconfident, increase their bets, and that's when they lose money. So in this method, confidence in buying a stock because the company has good financials versus having to risk your money every day. I don't know about you, but I would say that long-term investing is much less stressful. Number 5. Which earns more money? For long-term investors, if you invest in the S&P 500 ETF, you can expect an average return of 10% every year if you hold it over the long term. If you want more return but more risk, you can invest in ETFs like Tech ETF SSLK or Innovation ETF ARKK. You can earn anywhere above 20%. Or if you don't mind studying companies and keeping up to date with their latest news, you can invest in individual companies like Tesla or Amazon, where you can get a much higher return. On the other hand, a good day trader can easily make 20% in a single day, while a bad day trader can easily lose the same amount. For this case, I would say it depends entirely on the investor. If you are a long-term investor and have done all the research, then you'll be almost guaranteed to make good returns over the long term. If you are a day trader and have your system in place, you can make a large amount of money. But for everyone else who hasn't done the research or are using emotions to trade, you are likely to underperform the market or even make huge losses. So it depends. Personally, I prefer the easier way of earning money. I don't want to spend time reading the charts, and most of all, I don't want to risk losing my money, and that is why I choose long-term investing. But there's no right or wrong to investing style. The end goal is the same, which is to make money. Whichever you choose will depend on these few factors. Do you want to make money the easier and more guaranteed way, but perhaps a slightly lower return? Or are you okay to risk your money every single day, potentially earning more money, but also potentially losing more money? Let me know down in the comments below which style do you prefer. Like, share, and subscribe as I'll be posting new videos every Monday. See ya!